Good evening and welcome to Baldacci on Business. I'm Bob Baldacci, and tonight we're going to be talking about financing your small business. Our previous shows, and hopefully those of you in the audience have had a chance to see some of our shows, and if you haven't, you can access the shows on ctn5.org, and all the shows are listed there. But our previous shows focused on putting together business plans, forming your company, raising equity, utilizing available public resources and incentives. Tonight we're going to talk about working with banks, working with lenders to secure financing for your business. And I'm very, very pleased. We've got a great panel with us tonight with a lot of experience to bring to bear on this topic. To my immediate right is my good friend and partner in real estate, Tony Armstrong. Tony is president of Maine Home Mortgage and is on the Finance Authority of Maine Board of Directors. And Tony, thank you for being here. My immediate left, Josh Hayward, good friend. Josh came all the way from Bangor. He hosts his own radio show and column in the Bangor Daily News. Josh has worked with an awful lot of businesses, has been a banker, investor, entrepreneur, and finally Dave Tucci, who is probably well known to a lot of people in this community, running Portland Pie or working at Portland Pie, as well as a number of restaurants here, and is currently president of Firehouse Subs of New England. Very exciting new opportunity, and Dave's going to talk from the perspective of the entrepreneur. So. But before we get started, just if you could tell us a little bit about yourself, and then we'll get into the topic. We only have a half hour, and it's going to go by fast. But Tony?
Well, I come into the lending arena from the residential side. Actually trained as a lawyer, but I got into this business about 20 years ago and have followed the ups and downs of the mortgage industry with my business. And right now, obviously, a very unique time in the industry, which we can talk about a little more later. But in addition to making residential loans, refinancing home purchases, there is a good deal of activity that we do with refinancing to help people start new businesses, to use the equity in their homes to start new businesses.
So that's one of the things we definitely want to highlight tonight. Thanks, Tony. Josh, a little bit about your background.
Sure, Bob. I spent the first 8 years of my career heavily involved in corporate finance. Started in the corporate setting and then ended up in investment banking in New York and then back here in Maine in some commercial lending. And then for the last 12 years, I made the jump over to all entrepreneurial finance. So I've probably been involved myself with 15 different ventures over the last dozen years. And as you mentioned, I've had a lot of experience functioning as an advisor to early stage and growth stage businesses as well.
So Josh brings a lot of expertise to the table. And Dave?
Well, Bob, I'm a 20-year restaurant or food and service veteran. That's where the gray hair comes from. Challenging industry.
Yes, it sure is.
But I've been involved in numerous restaurant startups, and currently the area developer, area rep for Firehouse Subs for the greater Boston and northern New England territory.
Yes, and hopefully we'll have a chance to talk a little bit more about that and the challenges trying to launch a new restaurant opportunity in this market today. So let's get into it. And again, our audience is Greater Portland, people interested in starting or buying their own businesses. Josh, let me start with you because you have worked with a number of businesses at this stage of the game. Mm-hmm. What do you think are the most important things that people who are looking at a business, starting a business, wanting to approach a bank, needing to approach a bank for financing, what are the things they should think about?
Sure. Well, we all have heard about the 5 C's in our time. If we haven't, we'll talk about a little bit. Assuming they've already done some business plan thinking that you covered in the past, as you get ready to go to your bank or go talk to a bank and you don't have one yet, you want to be thinking about collateral. Do you have collateral? Banks are always going to be looking at collateral. That's where sometimes personal assets come into play, like homes. You're going to need to be able to show cash flow, which is capacity. If it's a new venture, you might not have any historical financials to rely upon, so you need to have good pro forma projections in place. Projections that bankers can look upon and feel they're accountable, reliable, and make some good assumptions based upon those numbers. Then third, you need to be thinking about capital. Well, we know that especially today after the collapse of the markets in 2008, 100% financing is non-existent. You want to most likely be mentally prepared to be at a 75% loan to value, which means if you want $100,000, you better be prepared to bring 25 yourself or have somebody bringing it with you. Then you want to be thinking about your credit history, the fourth big C. They're going to be looking at your business history. They're also going to be looking at your personal history, and that speaks to your character. Tied into that are your experience and skills relative to the business you're looking to develop. And then fifth, they're going to look at general market conditions. Restaurants. Is it a tough economy? Have there been failures in the market? Who's winning, who's losing? You want to have done your homework, know your market conditions as you prepare to go have that first discussion with the banker. It'll pay huge dividends down the road as you prove yourself to be more than credible in that first visit.
Dave, do those items resonate with you because you've been involved with your own restaurants and working with a team at Portland Pie on expanding that company, and now currently with Firehouse Subs.
Yeah, absolutely, and there's what Josh is talking about, which is your foundation to financing. But as an entrepreneur, you need to figure out a way to get it done, whether it's finding how to get the financing or finding out how to run your business profitably after you get the financing. So, and I know you've talked about this on some previous shows about your corporate structure, but identifying what your financing needs are initially, but also thinking about that before you start your business and you form your LLC, if you choose to go that route, because there are some lending options that are going to be based upon if you bring on a financial partner, which a lot of entrepreneurs need. If they don't have that cash that Josh was talking about, they're going to need to find that. You have to bring that to the table. So if you're bringing a partner into your business, there might be some financing options that would look for your partner's cash up front if they have a certain equity in the corporate structure. So really identifying what your big picture is in the early stages before you're even planning your legal stuff.
And that's all part of putting together a comprehensive business plan, because part of that has to be, all right, what do I need for money? Where am I going to get it?
And I think it's critical to point out the amount of time that you ought to plan for this capital search process. Many early or young stage entrepreneurs make a significant underestimate on how much time this will take and the effort included in that process. And that becomes a great distraction from their core business. So they spend 6 months turning their wheels trying to get financing, and maybe everything else is not happening as it should.
Excellent point. Tony, reaction to this?
Well, I think that, as you've discussed, it's oftentimes hard to get capital when you're starting out. And some people, and not all people, do have a considerable amount of equity in their home, and that can be brought to bear on a startup situation. I would caution that people, who have equity in their home shouldn't consider this to be free money. I mean, money is very inexpensive right now. Interest rates are very low, but you got to be thinking about not risking the equity in your house for a venture that's not well thought out. So that's very important. However, as was mentioned earlier, to get a bank loan, or a guaranteed loan, you need usually 20-25% equity in a startup business, and at least. And this may be where you get those funds, and it also may be where you get enough money to finance the whole business and not have to go to a lender for a business loan. And the reason I think it's timely right now to talk about using home equity as a source of money is it is so inexpensive right now. There's a lot of criticism in the news about Fannie Mae and Freddie Mac, and they've been through a lot. There's an enormous amount taxpayer subsidies that have gone into propping up Fannie Mae and Freddie Mac. There's FHA loans, there's rural development loans, but Fannie Mae and Freddie Mac have done about 75% or 80% of the fixed rate loans in this country today. And they're still doing it. They're still cranking out inexpensive capital. Investors all around the world buy these bonds, and that's the reason rates are so low. And it's timely because this weekend, rates bounced off the lowest levels I've ever seen them in my 20 years, and I think in history of experience. We're talking about a 3.875 or 4% 30-year loan with no points. A 15-year loan is as low as 3 3/8 or 3.5%. Closing costs, I won't go into the details, but they're not that expensive for closing costs. There is a change in the last couple of years. Fannie Mae and Freddie Mac have adopted some extra charges in some situations where there's a little higher risk when there is cash out being taken. Maybe a point or a point and a half is an extra charge for that. So the reason I think it's important to think about housing is indeed because housing as a source of equity for a business is so inexpensive right now. And also, another thing to think about is you can get a Fannie Mae or a Freddie Mac loan on a rental property. If you've got an investment property or your partner has an investment property, you can get cash out on those properties as well. It's a little more expensive, but those are great sources of equity. Just make one comment, the greater Portland area, indeed housing values have dropped, single-family home values have dropped everywhere, and Portland's not immune from that.
Right.
But you take a place like Portland, right now the apartment house values have more than held their own because people are looking for rental properties, rents are high, so people who own rental properties have a lot of equity in those homes. So it's another source of capital.
Sure.
Excellent, excellent. In terms of collateral, you mentioned collateral and having some skin in the game, which I think is absolutely critical for anybody thinking about getting into business. We talk about getting equity out of your real estate. But other types of collateral options, equipment. Now, in the restaurant business, typically, what would a bank loan against equipment from your experience?
I think it's going to vary from lender to lender, and certainly different programs. Tony can talk a little bit more about FAME, and obviously SBA is going to roll the whole thing up. But I think it's going to vary from lender to lender. But they're going to be more willing to lend on the FF&E versus your startup costs or your working capital.
Yeah, that's true. Accounts receivable is another way to secure financing.
It
You want to
is.
speak a little bit more about?
Sure. As you look to go find this financing today, and let's just assume you are wanting to go talk with a commercial lender, and you've covered your 5 C's, you have a good business plan in hand, and you're ready to go have some discussions. They're going to be very focused on cash flow as well. We know that for years we were a collateral-driven commercial lending country. The paradigm shifted overnight in 2008. And it went from collateral to cash flow. Do you have the ability to pay this thing back?
Correct.
So your commercial banks are really focused on that. So they're going to look at your business model and the conditions of the environment around it. Now, as you get in with your potential banker, they're the ones that can help direct you. They're going to start to point you towards SBA, multiple programs with SBA. The 504.
Talk a little bit about SBA,
Sure.
and then Tony will talk about FAME.
Sure, there are 2 key programs in SBA. 7A is the most widely known. That's your 80% guarantee for the bank. So what that means is they're not directly lending, but they're saying to the bank, we'll guarantee up to 80% of what you lend this entrepreneur. And I'll note that in 2009, SBA really stepped up, and they temporarily went to a 90% guarantee to help us get through that tough period. The other program is the 504 loan, which this is an interesting loan. It involves the use of a certified development company, a CDC, which is a nonprofit registered entity. We have a number of them in this area. And what's going to happen is it'll be a 50% bank loan, a 40% loan from the CDC, and then 10% equity from the entrepreneur. Another great way to finance equipment and assets. Then there's the USDA. USDA is another guarantee program. Tremendous use for you want to build a new facility. If part of your business is you want to build a manufacturing facility or you need to build a warehouse, your lender is likely going to consider SBA as a top option. And then I think the other big player right now is FAME.
Tony, FAME?
Yeah, FAME, keep in mind I'm on the board and I'm not a loan officer, but just broadly speaking, FAME and SBA operate in some respects much the same way. FAME, most of the loans that FAME does, and they do about 250 loans per year in Maine right now, most of them are guarantees.
What's the
insurances.
range, value, size?
We've done some on the board. The larger loans get to the board level.
Yeah, right.
We've done some stuff north of $500,000 recently to help out the papermaking industry. But the average loan is about $110,000, $120,000. And the FAME program does the guarantee, insures the loan for the local lender for about 80% of the loans that FAME does. The other 20% are through what we call the Economic Recovery Program, most of them anyway. And that's a direct loan from FAME. And there's more flexibility there. FAME has built up over the years since 1991 about a $17 million pool of revolving funds. And they roll that over about $250,000 a month. And they've done over the years, more than $70 million, in lending across the state through this one program, using monies that have been set aside by the state from bond issues. So it's a very effective program. Has been very well used during this economic slowdown. The other program I should mention briefly is that FAME has several targeted programs for natural resource industries, agriculture and fisheries related industries, and it has some programs for the medical care industry as incentives for doctors and dentists to work in rural parts of the state. So there's some specialized programs, but largely it's a program much like SBA. And I think that we should note that SBA and FAME both have worked very hard to make this a simple process for people. SBA actually has a 3-page loan application program that really does work. And FAME's isn't much bigger than that. Both of them can be done online. And certainly there are people in their offices. I know at FAME there are people more than willing to help people over the phone or meet with people. But the online programs are, in conjunction with discussions possibly, make the process about as easy as it can be.
And it's critical for entrepreneurs, people considering starting businesses, to know and hear from us that these loans really are happening. FAME is making that kind of volume of loans, and I might just mention SBA in 2011, in that fiscal year, they did 393 loans through Maine banks in the state of Maine for a total of $79 million for small businesses, which those are businesses with less in the private sector and businesses with less than 500 employees, which I think that's about 60% of our employment base in the state of Maine. So $79 million in a very tough economy, 393 loans, that's some significant lending in a state this size.
Dave, you're in the trenches trying to build a restaurant business. You've looked at SBA, you've looked at programs. Just talk a little bit about your perspective that hopefully people in the audience can relate to.
Well, in my industry, in the restaurant industry, because unfortunately there is quite a bit of turnover and there's a high default rate, banks are a little reluctant to lend to restaurateurs starting out. So a lot of the loans that I'm seeing are going through the SBA program because the banks are a little bit more prone to lend the dollars with the SBA backing. But like I said before, there are some requirements on the SBA side, and if you were to bring on a financial partner, an equity partner, if they have more than 20% ownership in the corporate structure, then the SBA program is going to look for them to put their assets up first before they lend, or a significant portion of their assets up before they lend. So that's, again, something to take into consideration, that if you think your SBA route is the way you're going to go, it might be prudent to understand that before you're forming your corporate structure.
Just hopefully to our viewers out there, you're not going to get clouded over with this alphabet soup of SBA, FAME, and USDA, and all of these programs. These programs do work, and I would encourage you, whether you're thinking of starting a business and you've got some assets in your home or investment property, to give Tony Armstrong at Maine Home Mortgage a call. If you're looking at putting together a business plan and want to knock on a few doors, and you don't know who the banks are, who's lending, who's more aggressive, who isn't, to give Josh a call. Their email information, contact information should be displayed on your TV screens tonight. So, and you can also access this program online as well. I'd like a little bit of discussion from all of you, because you all have your own businesses. You've been involved in your own entrepreneurial efforts. Talk a little bit about the challenges facing a startup company. Sometimes, you got to use friends and family. You've got to use your credit cards, creditors, micro loan program, whatever it takes to put it together. But just talk a little bit about your experience.
Well, I think from
Dave?
the entrepreneur standpoint and starting that business, you can't weigh too much on what your working capital is. And I think in every situation that I've gone into, you think you've got a pretty good grasp on it, but it turns out that down the road, you need some funds for something. Something's going to break. Something is going to fail, and you need to tap into those funds. So really identifying what your financing needs are, identifying how much cash you're going to need to put in. Something else I'd like to mention too that I'm seeing on the restaurant side is some people might not have that capital, that cash that they need to put down for that down payment. And what we're seeing in the restaurant business is there's some programs out there that are allowing individuals to roll over their IRAs and their retirement programs into stock options of their entity, which then when you go to the lender will look at that as that 25% down payment.
Josh, your perspective?
Sure, and quickly I will say that I have been on all sides of the fence.
Yes, you have.
I've had my house, my lake house, personal, second mortgages guaranteed. I've been personally guaranteed. I appreciate that moment in time when you sign these things away. And I would stress that as you're looking to venture into a new business, you really spend some time thinking about what it is you're going to need in terms of total capital, how you're going to access that capital, how long that's going to take, and whether you have the time and ability to source it along with all of the other tasks and responsibilities you have which relate to getting the business itself off of the ground. Unfortunately, cash is king. We know cash is king, and if you don't have cash, you can't get these businesses started. So afford yourself enough time to secure financing early on, and don't get frustrated. There's a lot out there. You may bump into a few walls initially. If you believe in your idea, take from each meeting and perhaps turn down the positives, learn from the negatives, and move on.
Excellent advice. Tony?
I think I could mention just three things quickly. First of all, you can't say enough about the need for a business plan. You've really got to think the game through, think the business through, think the market through.
Right.
You've got to kind of, and part of the planning is to plan for these contingencies that Dave mentioned. What can go wrong and how you're going to deal with it. Secondly, I think you've got to think a lot about talent. You've got to look for people who can drive the engine. The person who's running the business is usually running the business. You can't be doing everything. And you need to seek out talented, usually salespeople for a lot of these businesses. People who can move the ship down the road for you and with you and grow with the company. And lastly, and I think we all can agree to this, you have to be thinking about your credit report situation. A lot of people come up short when they go for capital, whether it's with a business loan or a home loan, because of their credit report and because of these new, fairly new FICO scores, credit scores that drive a lot of these loans. A lot of this stuff has been automated, unfortunately, and it's so easy to have your credit score get dinged because of just a careless mistake you make. You have a doctor's bill or two that you forget to pay. You think the insurance company's going to pay, and you just forget about it, and the thing comes back to haunt you and knocks your credit score down. 10 or 15 points, and all of a sudden you can't get a loan. Small things you have to think about, and one of them is this credit score situation.
And there are ways to resolve that, though, and organizations that can help with that from your experience,
That's
Tony.
true. But at the same time, it's so important just to avoid the problem up front. Then you don't have to worry about it, down the road. But you have to attend to the details when it comes to credit, unfortunately.
So we only have like a minute left, and if we could just kind of wrap it up with just a couple of words of advice, and I think a lot of what you've just said really translated into advice for our listening audience and viewing audience. So, Dave?
Plan.
Right.
Plan.
Yeah.
Takes a lot of time.
And I know from Firehouse Subs that the business plan and the work that you did to put that together was huge, and the due diligence involved in getting into
And it's
that
taken,
business.
it's been almost a 24-month process, so when you say
Right.
plan, and it takes time.
And the store will be open in Danvers, Massachusetts.
Danvers, Massachusetts. We've
hopefully
actually
in
got 3
March.
locations coming up in Boston and the greater Boston area
That's right.
in the spring. So
And hopefully in 2012 or 13, some locations in Maine.
85 total units in greater Boston and northern New England.
So very, very exciting. And Josh?
I'll jump on the credit bandwagon for my close. Tony's right on. A lot of people really underestimate that. And that can be a big time delay. Whoops, my credit score came in at 620. I can't get a commercial loan without a 720. Now I need a year to recover on top of all of the other things that you need to deal with.
Yeah.
Right. The last thing I can say is, we've been through some gloomy times here with the economy, but the silver lining is these interest rates.
3%, 4%.
Commercial money is very inexpensive. These rates are so low, it's a good time to be getting into a business if you can pick the right business.
Sure.
Ladies and gentlemen, our audience, thank you very much for your time tonight. We really appreciate it. Next month, it's the social network, using social network and branding. So we're looking forward to that program as well. Thank you. Good night.